Lord Ortiz. We are live. Are you ready?
Do, man? Let's do this.
Do it. What to do, KTTV? This is KT, and I'm coming at you live with another episode of the Administrators Podcast. I am KT, and this is my co-host,
JoJo, baby. What it do, man? What it do?
Look, man, we are in the building. Back to work. So life in the market is way different from our outlooks. We really have to pre-plan a lot on the weekends, and man, that's like a full-time job. Let the rigor show. But a lot of that going, man. So hey, everything has been fine on my end, man. How you doing, brother?
Man, I'm good, man. Things are okay at the schoolhouse.
Yeah.
Got some things going on with my aunt. Hopefully, we can get through this pretty quick. See what's going on the other side. But man, dude, glad to be here tonight.
Hey, man, look, man, glad to be in the building. Anytime you just get to have all these things in your head, you get to talk about stuff and you see it go up after that, you want to come back and be like, look, man, I kept telling y'all, but y'all don't want to listen, man. So it is what it is, man. We are here, man. So speaking of that, anything in the markets, man, that has been tickling your fancy over the past week since we last came on? Or did you have anything you talked about on this show that did hit within those few days?
Well, I think the one thing that we were talking about, other than that Starbucks, we kept talking about Apple.
Yep.
Apple has steadily crept up there. We got Nvidia that was on the climb, and so we're going to talk about that one later. But I think if you think about what we said about the market with this, fear and greed, and you think about where we're at with what we've been up and where we can go and how much we can go down, I think the market fluctuations the past couple, like last week, and so today, you end, on a red note, but at one point you're green. And so I think that if you were listening to the show, that right now going into September, the market is going to, fluctuate a little bit. And then, we usually have a little, downturn when it comes to that September. So, like I was telling KT earlier, man, market was down today, but I didn't know if I wanted to buy anything, knowing that September's right around the corner.
September right around the corner, man. Well, look, I'm buying, but I'm going a little long dated. But I agree with you. You think about the history of the market, you think about the sentiment, and what usually happens around this time, and that's why we always say, people, you have to look almost ahead to what's coming up. Look at the things that's going on around you before you make that decision. For me, man, I've been looking at a bunch of clips, and I caught one with Warren Buffett, right? And so then he talked about the intelligent investor. And so really, I've taken a few days to just kind of pull this book up and kind of go through it, man. So I've been skimming, really kind of looking at the insights of that book, basically talking about the long haul, everything we talk about is just kind of still hammers, like wrote 1949, and still till this day, the information is so pertinent as far as, like I say, just not being driven by fear, greed, which we'll talk about in the show, kind of putting down things for the long term, but also just the things we always talk about is looking at good businesses to put our money, right? And so what I've learned as a trader, as an investor, is it's always better to be patient and wait for it to get to the price you want versus jumping in and then maybe not even getting a 2-to-1 risk to reward. Right. And so with this book, it's kind of been talking about the reasons why you wait for that Apple to go back down to 175 or back down to 150, and then you load the boat and you just wait. Right. Because we know Apple is a good business. We know that they're going to keep rolling. And so then it's just a pullback, things on sale. So that's pretty much what the intelligent investor has been putting into me, man. So I'm going to finish it up and then I'll bring more back to the family, man. But that's been my plan over here, brother.
Speaking of Apple, a couple weeks ago we talked about Apple on the down, and just so you guys can remember our long-term plays, we do have some June Apple calls for 300. So Right about now, they're starting to feel a little fat. So
Hey, look.
hey,
Hey, but I did see. I guess we'll take a look at Apple too, man, because we're talking about that. Big tech as a whole. So going through that fear and greed, I want to kind of dive a little deep into QQQ, and also see if it's the time to buy a little SQQQ on the side, because they did go from 770 something to like 820 so far. So hey, this could be the time. So what we'll do, Bitcoin is on the radar. We pushed 65, now we're below 63. Let's talk about it. Going to share this screen. Wait a minute, let me take all the background off so people can actually see the screen. All right, so what they're saying is Bitcoin top 65,000 on the rate cut outlook. If you don't know, last Friday, Uncle Jerome, Fed chair, came out and said that in the next month, he feels that the economy is now time for a change in policy. If you try to get anything with your credit, you will know that the interest rate on that has been 5, 6, 7, 8, 10,000, all up in there, but it hasn't been anything like we used to with 0, 1, 2, and 3. Uncle Jerome said in September they will have a Fed meeting, and he sees at least 0.25 drop in the interest rate. What happens then? First that, and then everything went crazy in the markets. Bond treasuries, I have like some TMF that is 30-year, 20-year, went crazy. Everything went crazy. And so then this is how we get the news with Bitcoin topping 65,000. Jose, how long ago would you say that Bitcoin was at 51.48?
Probably a few months ago. Not too long. A month ago. Let me see. Bitcoin, 49.
1 month ago.
A month ago, then and that was on a downward spiral from 70.
Wow.
And so even a week ago, we were at 58.
1 week ago. So 50 to 65, right?
In 1 week, we've gone up from 58 to 65, and now we're back down to around 63. So a year ago, though, KT, 24.9.
24,000. So you would have almost, that's like, all right, look, let's get into this story, man. So last Friday, 8%, 65,000 per coin. He just said 1 year ago, 24,000 per coin. This year, 65,000. God, shout out to those $3,000 and $4,000 people. Shout out to those $500 people, man. Oh, but these the coins have been increasingly enmeshed in the crypto space as digital assets. So you think about the bit, more people are now buying up crypto. You think about who's that, Venezuela? They use it as like their currency. So many people are getting into this crypto asset class, and so that's why you're seeing those big swings when it gets down to those 40s. What people say, that's a buying opportunity to get it back to 65. Then what'll happen, as it's doing right now, it'll sell off. So as I spoke about last Friday was Jackson Hole, and so that's in Wyoming, where central bankers they get together and then they talked about interest rates, right? And as I stated, they are primed for a cut. And so this changes the cost and the way you borrow money. But as that happens, capital flows into the crypto space, which is full of higher risk assets. So please remember that when you get in here, if I can go from 48,000 to 65,000 in a month, we talking about high risk, right? So those people who jumped in got a nice reward, but think about the people that are buying right now thinking it's heading up to 70. It might be ugly for them if they don't get out of there, right? So As we look out for the future, by the looks of it, the broader adoption and continuous liquidity for the crypto market hinge on the scale of correlation to its traditional assets. And so if you go back and look, and we may pull this chart up over time, kind of looking at how Bitcoin and SPY kind of goes with each other sometimes, but there are times where they do split. But a lot of the time since Bitcoin has been running, whenever SPY has been doing good, I think they also show the correlation to that. The more Wall Street regular traders warm up to it through spot Bitcoin ETFs, like I say, through BlackRock or other places, those are how you those are the entries into the space, the better its chances for price appreciation and consistent growth. And I think the Veto maybe about $30 to $40 or somewhere up in there right now. So if you get that, you probably could have got it like $20 or so last few months, and now I was just steady running up. So that's another place like for people who want to just get into that space and kind of ride it. That's BITO is a good place. So it says, and then if that is the case where people pile in, then it's only natural for crypto to be impacted by economic news such as interest rates, decisions, inflation, and micro data. So they are telling you things will change, the interest rate will change, and it has affected crypto. And so as that happens, you look at the market today with a pullback, and I did get a notification on my phone that there was a pullback within crypto. So everything correlation, man. Anything you got to add to that, Jose?
I just think that, one of the things that we talked about with crypto a while back was a lot of this AI stuff. And even so, it's kind of cooled off in the stock market, cooled off in the crypto world as well. And I think one of the things that we also mentioned a while back was your heavy hitters, Bitcoin, Ethereum. They're not going anywhere depending on what it is, what regulatory actions happen, what you keep, what you don't keep.
Yeah.
So, just keep in mind, there's a lot of niches in crypto. Sometimes your safe havens are your Bitcoin and your Ethereum, or maybe some of your other things like Matic, Polygon, those, that actually have something that have been around. But I'm interested right now in the AI again, because, like anyone who invests, I added on this current dip, so that we've had now for, over 2 months in the AI sector of crypto. So, I added to that. So we'll see what happens.
Yeah. Yeah. I was looking at Sound, or not Sound, but SND or SOND, Sun, something like that, man. We talking about, I watched this stock from like $2 inside the group all the way up to I think today it tapped 845, right? And
SoundHound? Is it SoundHound?
Not SoundHound. It's man, I really have to look it up. Sunder, SOND. It's Sunder Holdings. Yeah, Sunder Holdings, man. And when I tell you this stock has been running, dude, you're talking about back in August 9th, this stock was 93 cents. Today, this stock is $8.30. And that's a testament to tell people 93 cents. Like, how many of those could you buy? Like 100 of them is how much is that? $93?
Mm-hmm.
So between here, you spent $93 on August 9th, and by August 26th, you have $830. That we're gonna do this to everybody who caught some of this SOND. I think I had some. I wrote it up from I want to say 2 to 5, like overnight a few days ago. Yeah, man. So I think I had like 1,000. And so just kind of roll it, man. Get in, get out, keep it moving. So that's pretty much the game. All right. So I guess, man, let's get into a little of the heat check. So we'll be right back. right, welcome back to the Administrative Podcast. I am KT, and this is
JoJo.
We are in the game. Look, y'all, we just kind of talked about the news, looking at crypto. Basic thing to take, higher risk asset, but it moves kind of with the market, kind of looking at that. But now, what we want to do is kind of get into the heat check. And in this segment, we'll look at our fear and greed index. We'll look at the stock map, the heat map, to kind of see how did stocks close today, which stocks are heating up in the sectors, and which stocks should you be looking at to buy. So we'll look at a little bit of that, as well as we'll look at the VIX. And so that is the volatility. How scared are people in these streets? So let's kind of jump into first thing be the heat map. All right, bam, right here, man. All right, Jose, man, I'm gonna let you start with this one. I just want to say, first off, our big tech stocks are killed, man. But tell me what you're seeing out here, man.
Well, and you'll go into this later when you start talking about the fear and greed. What I was alluding to earlier, where the market was fluctuating last week intraday, and again today intraday. And so if you look at the bottom left of the screen where you have your Nvidia, and then all your heavy hitters that go with Nvidia, where we were in the red today, Microsoft, Meta, all your big tech was in the red today. But a lot of borderline Apple, Google, Netflix, some Oracle over there were borderline, where they weren't up a lot, but they really weren't down either. One thing that I did notice was the fact that as far as they were down when it comes to them being in the red today, it still wasn't anything that was scary or critical. So as I mentioned earlier, there wasn't a lot of things that I bought today when it comes to anything long term. The one that was down the most, though, out of all of what I have is Tesla. Tesla was down the most today. And so that was the only one that I considered adding more to in the long term. But I haven't gotten to the point where I needed to add anything, because I didn't think I wasn't down enough in the account with Tesla to warrant making any moves even at this price point. So we're down $7 today on Tesla, and if I would have opened up any new positions, kind of didn't want to, because I don't know if this $7 is going to be part of this downtrend that we have going into the holiday of next week.
Yeah. Oh, and why you doing that, man? Just thinking about always thinking about people who want to get into the game. As we look at this chart, right, there is something called TSLL. So when he's talking about picking up Tesla is like 200 and something, maybe 205, $207 a share. But what I want to do is show you, share this one instead. Yeah. So what I want to show you is TSLL. And so this moves with Tesla. It's 2 times. So it's a little bit more riskier. I will say that because you're going to double your losses, or I'm going to double my wins, right? And so, but it is $9.60. And so that's the piece that I want to share with people. $9.60. So let's go back and look at our chart. When we look here, April 22nd of 2024. This year, this stock was, what is that price right there? $5.07 a piece. On July 24th, this stock was $15.89. So from April to now, if you came over here, right, and you put $500 by April, that was in April, by what is this? July, May, my God, that was 2 months. You would have had almost $1,500 or $1,600. So that's what is that? A triple? That's a triple, right? That's a triple.
Yes.
You would have got a nice triple. Now the thing is, Things what go up must come down. So right now we had a pullback. This is where I bought in a lot of mine right here. I got a few option contracts for next year, and so I rolled them up to here, right? And so just thinking about that, and I'm still buying because I know it's only a matter of time before we back over here at 16, right? And then if you go back even further, and you just go back, where are we up here? We at 20, you know? And so that's an intelligent investor. $5 down here, and we hold and we triple, we quadruple that money. Okay. So really, I digress, but I always wanted to show people that it doesn't take a lot to get into the game. You want Tesla, this is your exposure to Tesla. $9.60. You buy 100 of those, that's $90, right? And you hold tight.
900.
And you know, that's $900. Yeah, you right. Thought about that. That's $900. You buy 100 of those, that's $900, and you hold tight because we know that Tesla is at a real discount right now. Real discount, right? $200. We thinking $1,000 within the next few years. They're about to come out with like robots and cars that drive. Like if you got a Tesla, you can like robo taxi it out while you're at the house. It's out making money for you. So it's about to get crazy out here in these streets, man. All right. So back to the heat map, man. For me, everything is situational. So we got big tech, little profit taking, I say. Yeah, a little profit taking. People kind of pushing money into, I believe, where they'll get a bigger bang for their buck with the rate cuts. And when I say that, you think about stocks that are in the Dow Jones Industrial, right? So you think about a lot of those growth stocks. And so when you look at this green and you say, who is green out here? And so then you come over here and you got companies like Coca-Cola, right? Procter and Gamble. You got people like Pepsi, all of those people. Coming down, what is this? Charter. I don't even know what that is. But you think about Walmart, that's up, right? So many companies, Costco, all of these people are green because when look, it's about to get real out here and people trying to find safe places to put their money. Don't get it wrong though. I did not name any company that was not top tier on the companies that I just named. So people are moving it to safe places, profit taking, because you think about all these have run up. Facebook was just $400 something, and it ran up all the way to like 540. So a lot of profit taking. But the biggest thing is, and I want to get into this later when we start looking a little deeper, is looking at the oil. And so we know tensions over in the Middle East are picking up. It could go down really at any time. And so then looking at the world around us, how do we capitalize off this? And so looking forward to sharing that with everybody tonight as well. Man, I guess let's go to the fear and greed index. Okay, fear and greed index, people. What this does is this gives a sentiment of where the country is within trading, right? And so we have extreme fear, we have fear, neutral, greed, extreme greed. What I say every week is when people are fearful, we are greedy, because right here you're supposed to just nibble. Let's say if you think about a position that's in 100 shares. Over here, I'm definitely gonna pick up 25. And that's like from 0 to here. Once I get over to about here, I'm gonna pick up maybe another 50. And then when I sit here and I know that our neutral is really a neutral and we not finna fall, I'm gonna pick up that last 25 and then I'm gonna ride that 100 out until we get the greed. Because by the time we get over here, this is where we get rich. This is when everybody is buying in. So a lot of the positions, when you think about SPY, a few weeks ago, the SPY, which the S&P 500, was over here, and it was like 520? No, what it was, 530, Jose?
I think it was around 520.
Maybe 520. Right now, we are pushing 560, and we're over in neutral, right? And so we can keep going, or we can get shut down. but look where we're leaning towards. So that's pretty much it for that. How we kind of look at that fear and greed index, man. Anything you got for that?
Well, all I want to say is that September, October uh, will fluctuate. Fear, neutral, um, and history says even with the election, um, November, December, January, February, um, man,
Man,
be
okay.
ready. Be ready.
Man, be ready. Look, and the volatility is at an all-time high, so you got to be ready. It was so easy to say when rate cuts come, like I really had to educate myself, right? Because the whole time I've been like, man, rate cuts coming, bro. We finna get paid. But honestly, when you look at it, the rate cuts lessen the dollar, like they cheapen the dollar, right? Now everything is dropping down. And so that's why people are putting their money into bonds or gold, as we talked about last week. Because once that happens, then that dollar starts to weaken. If you look at it, it's already been happening. They've already been talking about it. So that's why gold, or that's why all those growth stocks in the Dow Jones are going up, because they're fearful. And so that's why tech is struggling. So just always paying attention. If you haven't bought in yet, right here, you really got to be selective about what you're buying, because you almost buying at the top at this point. Right? You think about a lot of the stocks that's running by now, all the people who are FOMO, which is called the fear of missing out, all of those fear of missing out people are over here, right? And so they'll push us over here. But then by this time, all the people who, just like I told you, all the people who bought over here, they sell it, right? And your big institutions have sold over here, ran it down, and then came back and bought it back over here, right? When everybody else lost. And now they just riding it back up. As you say, oh, this stock is recovering. Let me buy 100 shares. I'm going to ride it to the top, and then they're going to hit you. So just be careful while you're out here at this avenue, because we always want to be looking over here for good companies with good balance sheets that will take us to the top, that we know when the market is going down, they will stand the test of time because they have those balance sheets or those moats. All right. Lastly, we will look at the VIX. And so this is the volatility index. And like I said, it just tracks the amount of volatility that's in the market. And so what draws me when you look at this chart to kind of understand that is this happened in one day, people.
Yeah.
Like it was down here at the bottom. What was that? Japan?
Japan and Tesla.
Okay, Japan and Tesla.
Yeah.
Both of them took a they took a that day. And once they did that, everybody got scared out of their boots. And what happened? The volatility shot up, right? And when it shot up, the market shot down. And so now, as we look at this index, we're at a 16. And what happened today, though? It got kind of crazy in that market. And look what happened. We went up 1.83%. So that's people are a little scared out here, right? It's getting a little, but we got rate cuts coming. We got a lot of people not knowing what's happening. You're seeing a lot of the money being taken out of big tech stocks into growth stocks. And so this is how we get what we get. The thing is, we got a lot of people that bought right here, right? We got a lot of people who took advantage of that. The big money makers, all stop losses hit. So everything went crazy. And then what happened? They came and bought it back right here. And as this volatility goes down, the money for the stocks go up because people are feeling at ease. And we never know what's going to happen in the month of August, September. So let's see. We got to look. We just said August right here. We're getting a little spike. Let's go out 1 year. So what happens? Jose just talked about the month of September, and that is our spike that we were talking about for the VIX. So this is why we say watch where you buy. Anything to add to that, Jose?
No, just to correlate, there is a ETF that we talked about before called VIXY that goes with the VIX. If you want to get in on that, it's $11.45 right now. And so if you want to get a hold of some of those shares, or even some options going into September, October, right
Yeah.
around now. So
And so let's what I got is I went and pulled that chart up real quick. And so we can look at that VIX. This is the daily chart. All right, so we can kind of go back and look at the days. And this was September of last year, September 23. What was the VIX? It was 18, right? And so the VIX has got all the way down to, oh my God, this ain't the VIX, man. The VIX. Okay, so the VIX, oh, look at the carry day. Look at this.
Yeah.
$23. That's what the VIX jumped up to, right? And so now if you look at it, it's 11. But when you look at those crazy times, that's when the VIX can do its thing. And so look, as we look, it's kind of been still on a little trend that's going down. And this is kind of, I bet this is when we had our run for all that time. But you can see that line right there. And I mean, just down, right? But as we know, when this goes down, the market goes up, but nothing stays up forever. So that's why you get days like this. And you really just want to look. Just really want to look. But $11 a share. You really want to be convinced that it's a downtrend going. And the market is really pulling back. Right now, we're at all-time highs. So just be careful. Don't over, like what is it, man? Don't guess. Don't guesstimate. Get confirmation before you make a move in that thing. All right. I think that will do it, man. What we'll do is we'll take a quick break. Then when we come back, trading with Ortiz, man. Let's go.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
All right, trade with Ortiz. Let's go.
I love the chase and the hunt, and I set the pace when I.
All right, y'all. I don't know what. Well, he did tell me what stock he was going to talk about. But what I'm saying is, usually, what this dude talks about, if you just give it a little bit, it's gonna go up. I'm not trying. This is not financial advice, but I'm just trying to say you might want to get ready. All right, man. What you got for us today?
All right, so I'm going to start off with a disclaimer by saying that don't be afraid to trade the same stocks over and over and over, or your options calls, or whatever. I know a lot of people get tired of us talking about Apple, AMD, Tesla, Microsoft, Netflix, Chipotle.
Okay.
And then, my number one stunner, Starbucks. Guys, the market goes up and down. And so when the market goes up and down, the stocks go up and down. And so when you find entries and exits that suit you, according to the analysis or the chart, it's okay to play the same stocks, over and over. So, don't be afraid to do that. So I'm going to start off with, so can everybody see that?
Hold on, I'm about to put you up. All right, let me take this background off. There we go. We're good.
All right, so this is a 1-year chart on NVIDIA. And the reason that I put it for a year so far because I want everybody to see where we're at. Now, NVIDIA did have that stock split. And so we are going into earnings on the 28th. But what I want everybody's attention to is that by looking at this chart, you see two things. One, the chart has gone steadily up. And now we are at a point where we are hitting an all-time high that we have hit previously after the stock split. And so if you notice here at the very end, we have 3 straight shooting candles. But what I want everyone to look at, the reason why I'm picking this stock is because we are here dangerously close to the 133 area, which will be our double top. And in fact, if you even wanted to come here, but it didn't quite make it. So we got 133.79 before we hit a double top. And if you are unfamiliar with double tops, that usually means that we are going to then go into a little bit of a down, downward motion with these stocks. So, like last week, what I want everybody to notice is we got our RSI, our relative strength index. Remember, 70 and above, we are overbought, and 30 and below, we are oversold. And so if you look at this, we spend a lot of time in here over that year in the overbought area. So right now we are at 64.9, which is really, really close to being overbought. Once we get to that top right here, we will be in that area. And so like you can see that by the time we get to this area right here, we look like we will be crossing right around this area right here, which also means that our moving averages for the 12 and the 26, which is our MACD, those two will also be crossing here pretty soon. And if that red line crosses over the blue line, we will head, to the downward motion again. So I anticipate a double top here. And so once that double top hits, we will go down. Now, I think this could happen tomorrow because NVIDIA does have earnings. And I also believe that AMD was good. And, a couple other the semiconductors were on point with their earnings. So I do see a little bit of a pullback before earnings because I know people know something. And, I think they're timing the stock, to do that when it comes to the trends for their their earnings. So here is the 1 month chart. Again, RSI getting up there. Our MACD, we're going to cross here pretty soon. Now on the 1 month chart, we're at a 58. So we do have a little bit more room to run. Remember, once we get up here, or even at this one, we're pretty close to the 136. We could hit our double top. So once we hit the double top and we come back down, I think our first gap to fill would be the 125 area, and then quite possibly the 123. If we break that down, we are looking at 118. So if worst case scenario, we don't make earnings play, we hit our double top, we could see a potential downward spiral to around 118. I believe at 118, I would definitely be a buyer. I will add to the positions that I have for June. I have 225 calls for June. That is $100 away right now. If you think about it, we are, almost 130. And if you hit another $100 between now and June, that could be magical and life-changing for a lot of people if you got in when we did those leap calls, about a month ago?
Mm-hmm.
Yeah, we talked about NVIDIA back when we were trying to get y'all to know, right around here.
Yeah.
We talked about NVIDIA when it went under $100.
Yeah.
When? Right around my birthday.
Yeah.
So, guys, it's sometimes you follow the trends and sometimes you follow the news, and that all works out for you. So the last one I want to talk about, of course, is my bread and butter, Apple.
Hey.
And so, I don't know what happened here though.
Hey, hold up. Can I do one thing real quick before you jump to the Apple? Okay, wait. I want to do is, let me see if I can pull this up, or will it stop your screen? I looked up the ETF. Can you see that?
Oh, let me stop. Yeah.
Okay, so I looked up the ETF. Remember what I said? I want people to understand that it does not take a lot of money. So let's say you don't want to buy $100 per share, 120 per share on Nvidia, then you can always go in and get the NVDL, which is the 2 times ETF, right? And so it's a little cheaper. This is right now $66 per share, right? But when we talked about Nvidia and where it went, look at where it started at, right? Where let's see, right now we hold on. Let's look at where we started at. Oh, I'm just gonna put that line right there. Bam. That is $12.03. When did this happen? January 5th, 2024. You put in, oh, this was $14. Let's go back over here. That was 23. Sorry about that, y'all. Our lowest point was 23. That was $12. But even if you go right here, where you get a buy signal in 24, this is January 3rd, 2024. This stock is $13.24. $13.24. You put 10 of them. That's I know my math right on this. That's $130, man. $13 a piece.
Yeah.
Yeah, that's $130. So look, $130. Fast forward to June 24, 6 months. 6 months. This is where your money is. That $130. And how much is that, Jose? Is that $900 now? Because you got 10 of them.
Yeah.
So you'd have turned that 130 in 6 months to 1,000. What if you bought 25 at that amount? Right? And so I just wanted to show people, man, it don't take a lot. It's all about really that timing, right? How do you be patient and you wait for these times to happen? So you think about that 90, right? And where this thing can go, right? Because we were just here June 20th, $89. July 11th, we are 83. So now we're back over here, 69. At this point, when we bounced off our 200, we came all the way down to $33, right? And so even if you were paying attention, you bought right here, you pretty much to double your money already. $30 a piece right here. Just give me 5 of them. Right? And so this is why I just wanted to show y'all, even when we talk about the big stocks, you can still jump in, get in over here. Okay, Jose, man, jump back in and get that Apple for us, man.
All right, let me get this Apple real quick. All right, so again, when the sky was falling, we talked about this Apple. All right, I want to say that right around here, a little bit, we were under 200, but I want to say in this area, right when we got a little bit of a confirmation up, about 201, 202, we were buyers of Apple, and now look where we're at today, 227. So I bring this chart up because, again, this is the 1 month chart, 61 RSI. We're almost to the oversold. I think we can get there with this month coming up. We've already broke the double top. So we were double top. We went down a little bit here, but then we went back up. And so I think that we can start to elevate and get to around 230. If we can get to that 230, now I do believe that we can hit 235-ish and be in that area before we get, into another double top over here. I'm wondering if we can do that, all before, September and October. Because I say that because as of right now, I still own several 250 calls for January. If we start pushing into the 230s, 235-ish, I would definitely start selling. And then I'm looking forward to whatever comes next because I also have, like I mentioned before, $300 calls for June. Looking pretty good right now. So our RSI and our MACD looks like we're going to drop here a little bit, depending on which way the market takes us. If we continue to go up to our next top of 230, and then let's say we do break down some 224, and then quite possibly we're going to start coming down into our gap to fill around 212. I don't know if the line at 212 will break, considering that if we did, we still have this one, and we have this one. And so usually at a triple bottom, we bounce. So 210, 212 is the area that I look to see where if we do go down in Apple, that's about as far as I think we can go. So, all right.
There we go, man. So what you saying? Look at Apple for what you saying both going down?
Yeah, both are going down for right now because that'll lead us right into September.
Okay.
And so, and once we hit that little downturn, and we, depending on what bottom we hit, I anticipate it to come back up to the trajectory from, October, November, December.
Yeah. Now, I will say, as he talks about those, there's only one X factor in the boat that could invalidate everything he said tonight. NVIDIA earnings.
Yep.
I think if the earnings come out and it's what everybody want to hear, what they say, a rising tide lifts all boats. And so I think, but the same way that it can go up, if they hear something they don't want to hear, it's going to tank the market, man. I can already see it. It's going to be a nice pullback, man. Well, all right. What I want to do, let's take a quick break, and then we will come over. And I want to just go into the charts a little bit and talk a little bit more about what's going on with that oil. And I just want to look at one move that we could potentially make that can get us the bag. So let's take a quick break, and then we'll be right back. All right, y'all. Welcome back to the Administrators Podcast. So for me, as we get ready to talk about what's going on in the world around us, and we looked at our heat map, right? And we seen like oil was coming up. So you think about your Chevron, your Exxons. I just want to kind of talk about why why oil is taking off, and then we'll look at what we can do about it as traders. And so the first thing we think about is the supply constraints, right? So we think about OPEC, which is the oil people. They just recently decided to maintain the production cuts, right? And so when you think about cuts, what's happening? Scarcity, supply and demand. So that's one reason oil is going up. Next, once again, let's talk about command. As economies around the world continue to recover from the pandemic, there's an increased demand for oil. More people are starting back to traveling. Industries are ramping up their production, and the overall economic activity is on the rise. You think about the rate cuts that are about to happen, right? People have a little bit more money because their bills will go down just a little. They're going to get out in these streets. The biggest thing that I wanted to talk about, though, which is driving oil right now, is the geopolitical tension, right? You think about Libya, who has a strong footprint into the oil, millions of barrels a day into the oily company. In key oil producing regions, any hint of instability can send shockwaves through the oil market. And so those recent tensions in the Middle East have raised concerns about the potential supply disruptions. Remember what I said, you take a few million barrels out of the mix every day. And then we already taking barrels who Russia's shorting us because we beefing with them. Now then we'll say Libya is shorting us, and then the Middle East becomes in turmoil. What happens? Gas goes through the roof. And so that's how we have everything going out in the oil. Now, What is the biggest problem with all this? All this is market speculation, right? All of this could go crazy and be over with tomorrow. So let's not forget about that piece of it, right? Hedge funds and other large investors are betting on the future direction of the oil prices. And so when they start buying up the oil futures contracts, it can almost look like a self-fulfilling prophecy, right? Just driving the prices just even higher. So right now, the sentiment is bullish. So we talked about our fear and greed, but the sentiment is bullish. And so a lot of people are expecting this to climb. And so what we want to do is look at what can we do to go in the meantime. And I will show you a play that I have hit off of, and we are not going to do it yet because I really don't want to fight the trend. So I won't do it yet, but I want to look at ExxonMobil, right? So what I did was I took a little time and let me start. Okay, is it showing? Add to page. All right. So I want to show this ExxonMobil chart. And when we come over to the ExxonMobil, here are a lot. Man, is that too confusing? That's too much going on?
No.
Okay. Well, not for you, bro. You used to seeing it, bro. But let's look at Exxon. Exxon got right here to 123, and then it fell all the way down to 107. Then it came back over here, and now because of what's going on, we got it coming back up. Let me go to my 4-hour chart. Yeah, that'll give us kind of a little bit better. So we can see what happens. Oil hits this line right here at the top, 119.71, comes back down. It hits 113. What happens? It bounces off of that, goes back up, hits 119.71. What happens again? Comes back down, 113.88. What happened? It came back up here, boom. It knocked down, but I guess it was still good. This is August, right? So we still got a little tensions happening, but nothing brewing too crucial. Everybody's hoping. Remember what I said, market sentiment, investor market speculation. They saying, oh, well, it's still going crazy over there. This is when everything started heating up, middle seas. But boom, we get back up to 119, bounce back down. We get back here. Oh, it looks like it's going to happen. Israel said they could be attacking Hezbollah, blah, blah, blah. We go back up. What do we stop at? 119. Oh, they're not, because I think we thought that, man, I can't remember who that was, but somebody was supposed to retaliate very fast, right, on what happened. But they didn't retaliate. I think that was Iran was supposed to retaliate against Israel, but they never did it. So the people said, what? Oh, man, they playing. Shh. We go back down, right? But where did we stop at again? 113. Now, for all of my math people, we're looking at patterns, people. We are looking at patterns, and I am showing you the pattern in real live data. So, Jose, if you were reading the pattern, where do you think the highest probability of this stock is going to go next?
Well, I'm looking at it, and I think we can go back up to 120, 121.
Hey, man, you about to fail the test, bro. You supposed to say 119, bro.
Well, but if you go back, I think we can break that because it will be.
Yeah, because of the speculation.
Yeah.
But what I'm saying is.
Oh, yeah, according to that resistance.
Yes, man. God damn, that, bro. You was in no more. Hey, bro, I'll just give you one horn, bro. You had no more demonstration podcast, bro. We will ask you no more questions, bro. Now, let's go back to the map, y'all. Let's go back to the chart. So what we want to do is, but Jose proved a great point because this is what I wanted to make sure. We just talked about market speculation. We don't anticipate. We get confirmation that it is going to happen. Mm-hmm. So now, for the people who want to know what that looks like, what happened right here? See that skinny wick? Mm-hmm. That's called the rejection. We got this line right here. Rejection. Every time you see that skinny line is saying rejection, right? We didn't get rejection here. We got a little bit, but that's when that candle was closing. Little bit, but did we go higher? No, we did not. So that's still rejection, right? And then we tried to go higher. What happened? Rejection, rejection, rejection. So what am I looking for when I get here to say we could potentially be coming down here? I am looking for a rejection. And so to Jose's point, if this stock gets here, gotta keep them things on point. All right, if this stock gets here and it does not reject, and instead of rejecting, I get something like this, then I say, wait a minute, I don't look for it to go down, because what happened? We got a rejection right here, and then that next candle, now this resistance, which is what we call at the top when it rejects is resistance. Now it's on top of this line, and now this line has immediately turned into support for this stock, right? And so I don't want to anticipate because I see that pattern and just rush in and buy. I want to wait to see if I get that rejection. And if I get that rejection, then I'm going to go in for the kill, right? Because if I get that rejection, I can always buy right here, set my stop loss right here. So that means if it closed above that line, this is not the trade for me. I'm out of there. But I always run the risk of saying, well, it already reject. I already seen a rejection wick, which means I got confirmation. I can now take the trade. So for everybody, I want you to be able to go in, look at the chart, and see what happens when we get right around this area. And so what I'll do is move it down a little bit, and I'll give you a better number. Let's look at, for that number, bam, we'll see it right there. $119.36. Right? That's where we're going to start paying attention to it. So 118.81 right now. Hey, don't even trip. Don't even trip right now. You got a few days, right? Or it could bust out tomorrow. But once it gets up to 119, you want to start looking at Exxon to see what is it going to do. And if it's going to drop, if you play options, it's time to get into you a quick put. Or if you buy shares and you want to just get yourself invested into this, wait till we drop and we come back down here, and then you buy you some, right? You buy some at 113 and then you ride it back up. That's pretty much all we're gonna do with this. Is we're gonna rinse and repeat with that, man. So that's information on Exxon, man. I don't really know how else to put it. I hope that was something good, because we cooked in the kitchen tonight, man. Woo! All right, hold on, wait a minute. We got a comment. Look at Doc. She said, what we doing here? Man, Doc, we got to get together. You see the charts. But Doc, you know we can talk, Doc. Don't even trip. All right. So, brother, we got about a minute left. Anything before we get out of here regarding anything that we talked about tonight?
28th, NVIDIA earnings, make it or break it.
That's yeah.
It's our last big one for tech.
No, the 28th of this month, aftermarket Wednesday. Wednesday is when it's gonna go down. Hey, most definitely. Look, hey, we're gonna get Doc on the heat. We're gonna get Doc at the game. All right. The 28th, I agree with Jose. NVIDIA earnings is about to go crazy. Please make sure that you do not gamble on earnings and say, I think it's gonna go up. I think it's gonna go down. 9 times out of 10, even if it goes up, you're gonna lose your money because of the IV crush. So just hold tight, react to it when the market opens, and get your money. Other than that, be careful out there, y'all. Go back if you missed anything. Please go back and check the other podcast. We talked a lot about chart reading. I think that will do it, man. So as we get ready to close this out, this is KT and
JoJo, baby.
And thank y'all for tuning in. This is KTTV signing out. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.